Everybody, welcome to the Baguette Investor channel for a new video. We're March 23rd. Welcome to this new video. Today, first, we are looking at the weekly buff, just like in every single weekly video I do every Monday. If you like these kind of videos, you can subscribe, turn on notifications, and you will get them every single Monday, either in the morning or in the afternoon in Europe time. It depends on how motivated I am when I wake up in the morning. So first we start up by how much money I made or lost last week, and after that we look at the markets, see what the markets are telling us in terms of which way we need to target our investments, and after that we look at trades I took and trades I am willing to take. Let's get started with the accounts. You can see that the profits started to kick back in, so either being a start of a new wave up or either being a fake signal. No one knows, but what I see is that my portfolio is starting to stop its downtrend. You could see that since the start of the year, I've been in a slight downtrend that I made all back in 1 week of trading. And after that, we had a small consolidation of 2 weeks, and now the last week was quite positive. It was not the best week I've ever made, but it's still green, so you like it. And now it means that for now my trading year is in profits. I am now in 3% in profits, and because of my trading strategy, it allows me to limit the loss in the downside, but not that much on the upside, which means when I make money, I make a good amount of money, and when I lose money, I lose a small amount of money, which allows me to keep in profits. How do you do that? Well, basically you stay in the position as long as it's going up, and when it starts going down, you cut and you stay out of it so you don't lose what you have made before. But we'll get to that in future videos. Right now, we need to look at what's going on in the market. So first thing we're going to look at is our stocks. Second, we're going to look at commodities. Third, we're going to look at bonds. Fourth, we're going to look at forex, currencies, what they're doing. And in the last part, we're going to look at crypto, because there is a very, very, very interesting signal coming out of crypto. You really need to see it. I think most of you have seen it, but I don't see that much people talking about it on FinTwit. So you should be really looking at that. I will make timestamps if you don't want to look at the parts that I'm going to talk about, but you could still look at it because it's interesting, and maybe you might be interested into discovering new markets, because financial markets are not just crypto. So let's get started and stay until the end to watch the crypto part. First thing you need to understand is that countries that outperform have not always been the US. The US is a country that has a very, very powerful stock market because it has one of the best companies in many sectors, but sometimes, just like in the period we're right now, it just is not the best place to be. So last week we had a fake bearish signal that triggered a nice run. So the last two weeks were very, very good. You might expect maybe in the weeks after that we start to see a little throwback, a little correction, people taking profits. But right now it's green, so we're happy. But what you can see is that the market has still not made an all-time high. We're far away from an all-time high on the S&P 500, which is the reference index. However, you look at MSCI USA multi-factor, which is basically an MSCI USA, which is basically the US stock market, but based on a basket of of medium and big capitalization, So you can see that the support held very well, so that is very good. We did not enter on a bear market on this index, but however, was still not near the highs. We didn't make an all-time high, so that would still be a range market, and range market are not good for me as a trend follower. Something else, MSCI Canada. Look at this. What do you see? And I think it's pretty obvious to you that MSCI Canada is looking very good as it's making new all-time highs right now. So as the other USA index is still in range, very good looking little pattern that may trigger a new bull run, but it's still very, very immature. This bull market is starting to be very mature. And if you look at this on the global scale, we're going to remove all my drawings. There you go. You could see this. How can I remove this? Jesus, there you go. See that on a very long-term scale. This is absolutely gorgeous. This is the previous all-time high back in 2008. This is retesting the previous all-time high since 2008 and is now making a crazy move. Of course, we might see some consolidation like this, but I think, in my opinion, a chart like this looks much, much, much better. And what that tells us is that you would rather look at Canada than you would rather look at the US. The answer is very simple, is because the S&P 500 is overweight in growth stocks and technology, especially that are in this moment a lagging sector. But Canada ETF are overweight in value sector like financials and energy mining stocks. That makes them a leading sector. So it's not much about the nationality of the stock. The stock does not go up because it's Canadian. The stock goes up because it matters in the terms of the actual economy and actual sector. Meaning, we are going to talk about the leading sectors right now. Leading sectors right now, very, very simple. Growth is lagging. What we call growth is basically stocks like that. The one that would be in the NASDAQ, the one listed on the NASDAQ, the unprofitable tech, the small and medium companies that need a lot of money to grow. That would be growth stocks. You would have like technology, some healthcare stocks, biotechnology, many sectors could be included into growth, but what I would refer as that, very, very simple, is just technology sector. And on the contrary, there are sectors that are just really killing it. Look at that. It's the S&P, metals, and mining. So they just make an ETF based on the index. So if you look at the ETF, you are looking at the index, to be very clear about that. So we're looking right now at the Standard & Poor's Index, metals, and mining. And you can see that this looks nothing like the S&P 500. Like, you see this thing going crazy, and I tried to write some. I managed to write some, but not as good at the index, so I still need to work very hard to outperform the reference index. But what you can look at is, you look at this performance. So you divide this by the performance of the S&P 500, and you're going to see how times changed. You could see that for the last 10 years, this index was underperforming the S&P 500. So if you invested into metals and mining, you would have lost money if you compare that to the S&P. But right now, since the COVID crash, you can see that it has been a crazy going sector. The reason would be commodity prices going crazy, inflation narrative, and all that kind of stuff. So inflation narrative, very, very interesting to look at. Metals and mining. You have another index that is a global MSCI Select Metals and Mining Producer Fund. So this index was Standard & Poor's. This one is MSCI, but you can see they both tell the same story, that the trend is good. Copper miners, very interesting. New all-time high on close price. Copper miners is a very more specific ETF that focuses only on copper. Steel ETF, which is another very specific ETF that focuses on the steel sector in worldwide. It's not specifically to the US. And you can see that the steel trend has resumed since this signal right here that I was watching but didn't manage to take because, mistakes were made, but I'm still very, very heavy into value stocks, so I'm not unhappy that I missed this. Anyway, look at that. You had the extraction of right there, and there you had the consolidation. On right there, I set some limit orders, like somewhere here on some steel stocks, but the market was just too strong, so that my limits were not taken. That's a sign of a very, very strong bull market. When the market does not even correct to take your limit on the support, it means buyers are very, very eager to buy the stock, and that makes you very confident about the bull market. So right now we're very, very overextended, so it's not the time to go heavy into steel. The time to go heavy was all the way up here. But right now you can look at it and find some day trading. I don't know what your style is, but it's just I'm giving you what's smart, what's working right now, and after that you do it by yourself. XOP, which is oil and gas. You obviously have heard about oil and gas prices. I don't know if in your country you use a car to move around, but you may have seen the gasoline prices going absolutely crazy. Well, stocks are profiting from that, and especially the ones selling, processing, and extracting the oil that you're using in your daily life. And you can see that this ETF tells you exactly this story. You have American Pipeline, which is a pipeline ETF, which is basically stocks that transport the oil through the world. And you have REMEX, which is rare earth strategic metals. So what's going to be strategic metals? Well, it's all the thing you would call, lithium, manganese, cobalt, all that kind of stuff. There are mining companies of that, and you can see that the trend is maybe starting to resume. So if you remember, we are starting to see the same thing as here, exactly the same pattern. If you look at it clearly, you could see similarities. So keep your eyes on this. And I see this also, which is not the best sector, it's not the leading one. It's very cool sector that might have some nice decorrelation with the others, so you might be interested into this one. It's aerospace and defense. It's a very sad sector because it usually goes up when wars happen, so you can't be happy about this going up. But yeah, it's working, and I know I'm sharing it with you anyways. This is a commodity index, and I want to show this one. Yeah, MSCI Agriculture Producers. Look at this. Do you see any bear market right there? I don't see any bear market right there. When the candles are so good that there is no wick on the upside. You know that feeling when you look at the candle and you're like, wow, there is not even a wick on the upside. The candle is so powerful. Of course, the place to go hard was here. Absolutely, I believe it's a Deere, the leading stock, a Deere company. Yeah, exactly. Look at this. Now, I'm not holding this because it's such a big company that I have no edge on this, and I don't plan on owning multi-billion companies. I want to focus on small and medium companies, but this ETF is looking very good, and the agricultural sector is looking good again for the same reason the other stocks look good, because the agricultural commodities are sadly going through the roof. We're going into a massive food crisis all over the world, and the investors are really, really focusing on this right now. Last thing, healthcare, pharmaceuticals. There are some healthcare strength, and not all healthcare stock, but pharmaceuticals are one of the interesting thing. And on the screeners, I saw some healthcare stocks. It's not the sector that I privilege, because there are many other different things, and you need to choose very little stocks in order to be very focused. But I'm sharing this to you anyway. So yeah, that was the big overall sectors that look very good. And now, in these very specific thing, I will do a special video about it. But there is not uranium, lithium stocks that I'm heavy into. Right now they're looking kind of red, but you have some lithium stocks listed in Australia. So these ones are the one listed in Canada, and these one are the one listed in Australia. So if you want the list, just write a little comment and I will share the list with you, or join the Discord and ask me. I will share the list with you. But you can see many stocks are looking quite good, and they made beautiful. Look at most of the candles last week were, well, it's too much of a small cap, but yeah, there's clearly something going on. So you should be looking at that if you're interested into lithium like me. Just take a look at this. It's very interesting. And the sectors that are lagging, well, you guessed it, it's technology. Technology is now a lagging sector. It's a sector that is being left behind. Well, it outperformed the last 10 years, so I think we can leave it a year or two to be outperformed by other thing. And as long as we're in the inflation narrative, this is going to be something true. Inflation narrative, we're going to talk about commodities. Commodities, you have multiple indexes. You have the GSG, which is the GSGI ETF fund. You have the GBC. They tell the same story, that commodity prices are just crazy and that it might not be over. This kind of pattern is very bullish. I'm a little scared right now that inflation just starts to be completely crazy, and that, you know, prices go 20% above year over year. I was very afraid that when we closed above this big resistance line, I didn't long commodities because I didn't think it would go that hard. To be 100% honest, I have no experience in commodity markets. I just started this year. I just have my experience in terms of technical analysis. But look at how, quote, undervalued we are compared to the overall market. Like, when the commodity prices go hard, they go very, very, very hard. And we're not even at the 2015, 2014 levels. So I'm really scared about commodity prices. But if you look at it on a purely objective view, it can clearly go up much more. And you need to be very, very cautious. If you break them into pieces, you focus on energy. Back in the days, I wrote that if we break here, inflation goes crazy. When I was talking about here, I meant about this resistance here, and I made no mistakes. So I'm a little sad that I wanted to buy commodities right there on this double bottom figure, and I didn't. So yeah, I want to kind of punch myself in the face right now. But anyways, if you look at agricultural commodities, they are also in a very beautiful trend. So you can see that this looks like a consolidation in a bullish trend. It does not look like it's going to reverse. This is terrible. Every day, agricultural commodities go up. Are people starving because they can't afford? You need to remember that. You can't be happy about the prices appreciating. So yeah, I hope people think about this. And you have base metals. who are also just completely crazy. Like if you look at from the bottom to the top, it's 107% increase, which is going to lead to massive inflation that we're already seeing. The only bizarre thing I'm kind of sad is that gold is starting to print a bull market, but if we start to close below, I will exit my gold trade. But right now, I'm still waiting for it. But yeah, as long as we're not breaking above here, and as long as we're staying into this ping pong play, I'm not touching gold. I'm staying in my position. But yeah, this is all I do. So yeah, be very careful about commodities. Check commodity prices. There are opportunities if you want to trade them directly, indirectly, and there are opportunities if you want to trade the companies related to them. I'm going to repeat this every single week. But this is something you should really, really pay attention to. Commodity prices lead to inflation, lead to rising interest rates. Rising interest rates mean investors are freaking out and are selling their bonds. You can see that over the last week, the 10-year yield of the United States has gone quite up, crazy. It went from 2 to 250%, which is a massive increase when you talk about bonds. So we could call that a bond crash, if you want to be honest. So this is the 10-year. And if you are not familiar with bond, maybe this is a market that you discover. I don't know. If you tell me in the comments, I would be interested to know if you're trading multiple markets. So if you're just familiar with crypto, for example, bonds are very simple. When the interest rates go up, the value of the bond goes down. If you want to understand why, it's very simple. The interest rate represents the risk. So if the interest rate increases, the risk increases. If the risk increases, the value of the asset decreases. The riskier the asset, the less valuable it is. So there you go. You can see it increases a lot. And if you look at the BND ETF, which is an index that tracks the bond market, you can see that it's pretty obvious. I don't need to comment. It's looking bad. Bonds are very bad, and people selling their bonds. That's what people say, and that's what I say too, because I think they're right. You could see the TLT, which is the very, very long-term interest, very, very long-term bond for the US government, and the IEF, which is the midterm bond. They are breaking down, quite frankly, very strong. Of course, during this markets, you have huge volatility. Yeah, you could have things like that, but yeah, the overall trend is down and bearish and uninteresting for bonds. Same for Europe. This is the German bond, which is basically the best bond in the world that is going down, and that is breaking down strongly from this uptrend, and that maybe we're entering in a bond bear market. I don't know. I'm just seeing what's happening day to day. Bond bear market currencies. The dollar is strong. Dollar is the king right now. I'm really paying attention to the dollar index reaching this resistance, but right now the dollar is looking good. So keep holding dollars. It's a good currency. What else can we talk about? Yeah, finally, I think this is the thing you were waiting for. I'm going to talk about cryptocurrencies. Cryptocurrencies finally showing strength after so many times. Like you had, even this bottom was not good for Bitcoin. So the first really kind of bullish signals since March 21. So it's a year without a bullish signal on the macro level, on the weekly level. You could see that we are now exiting this consolidation by the upside. And if you zoom in on the daily, you could see you had a first attempt there, and now we are getting out of this. You could have the throwback. The question will be, is it holding or is it not holding? I'm not placing big bets on a setup like this, because this is a double bottom. What I'm placing big bets is I'm waiting for the market to hold and to show me confirmation. I wait for confirmation for this bottom, but this is looking very, very nice. If you look at Ethereum is also trying to gain strength and get back to the beginning of the year level. And if you look at the market cap, it's also breaking above its resistance right there, and now it's printing nice run up. As I'm saying, we're going to probably have some correction either here on, I don't know, somewhere, but this is not going to go up in a straight line. Don't worry, you always have corrections if you want to enter. But yeah, cryptocurrencies are finally showing strength. I'm very, very happy that I can go back to my screeners and see cryptocurrencies, what they're doing. Interesting. So we're gonna take a look at what crypto I'm looking at. Look at the crypto markets. There are finally some opportunities. Of course, these opportunities are not daily opportunities. Like you're not gonna have a weekly trade just like you had, you know, somewhere around there when it was the moment to buy crypto. There right now, it could be the moment, but as a trend follower, I'm waiting for the trend to settle, and you know, for example, this trade to go up to make a consolidation, and then I'm entering. So I'm not in a rush. I'm just in a rush to make maybe some quick trades like on the 4 hour or on the 1 hour. So I'm looking at short-term charts, and you can see that I'm looking at BNX, which is looking quite good. Like this is the kind of trade that you could buy here, set a stop loss here, sell half here, and maybe sell another half here. I'm looking at SDAO, which is same thing. Very strong trend, looking beautiful. This thing, you would not use a stop loss, you would look at it directly. You can see this is looking good. I'm looking at CoinWeb, which is same thing, good trend, strong. I like it. There are more and more things coming to the screener, but on shorter time frame, on longer time frames, this is way too early to enter for a trend continuation. But if you are a value buyer, for example, you buy the cycle, you try to catch the low of the cycle, and this might be a good time for you. I don't know your strategy, but I know friends who started to buy things and that are believing this is a good risk to reward, because in terms of trading, you always think risk to reward. In terms of stocks, I really like the stock market right now because you're starting to see more and more strength. Finally, after so many years, after what, a year and a half of bear market? No, maybe a year, since March, April 21. Like the same for Bitcoin. I like this stock. Look at this. Very, very beautiful pattern. You call that a base. So this is a base right there. This is extraction of the base. This is the consolidation. And this is the start of a new bull market. And if you look at the volume, same thing. You have massive volume. Volume decreases, showing that people are not selling their long-term positions, and now volume is starting to pick up again. So this is a good sign that you are on the right stock to watch. Validation is it keeps going up, and validation is that it makes new low. Very simple, easy. And if the market is bullish, you have the odds with you. You repeat this process over and over and over and over, and that makes you a profitable trader. Other stocks that look good are Sheriff, Intercorp. Look at this. This is a mining company. Piedmont Lithium, which is a lithium company, as I spoke about lithium last time. I have precious metals company. I have chemical companies. Advent 6, like this looks like a nice setup. BTU, which is a coal company, you might have heard of it. CJ, which is an oil and gas company, that is looking quite nice with this setup. I like it. And GME, I don't know if people heard about GME. You remember that from the short squeeze. You probably know about GME. Well, it's looking good. I'm not touching it, but I'm keeping my eyes on them. This is defense stock. So if you're still watching this until the end, well, thank you so much. I hope you're finding value into what I'm saying. Just to finish the video and say goodbye, I'm just going to show you the trades I took that are very profitable right now. I took a shitty trade that did not turn good against me. That started to turn against me. So it started very well with one candle, and the other candle was very bad. But the trade that went very good was AVZ, which is a lithium stock. I keep talking about lithium. I love this. It suits me so well. I just keep making money on lithium, so I like it. I like what makes me money, and I dislike what makes me lose money. And yeah, AVZ is very good stock. So that's it. Pay attention to what you're doing. Try to beat inflation. See you in the next video. Goodbye. Have a nice week.